Well, let's get back to Eddie Young for a review of the debt and currencies market. Over to you, Eddie.
Thank you, BC. Just before we go over this again, let's just talk to Babajide Sholanke, a fixed income dealer at FSDH Merchant Bank. Good morning, Babajide. Thank you for joining us on the program.
Good morning, Eddie Young. Good morning. Thanks for having me.
So how was trading yesterday after the MPC's meeting, and how do you think that the decision will impact the fixed income markets going forward?
Thank you. After the MPC meeting announcement, communique read out, we can see the general policy direction of the central bank is to ensure that interest rate is low so that it can promote economic growth. So the impact on the market, what we saw was that everybody was trying to pick as much as it can be, peak in the market, and understandably given the fact that we have noticed the central bank is allowing maturities to roll over into the system without rolling them over. That means they've been allowing significant injection into the system, has actually increased liquidity conditions and created liquidity support for demand. And we saw that demand is very persistent, and we saw people buying bills, whether only treasury bills across the course. So going forward, we believe that impact of the MPC decision of the general level of interest rate, of course, the low environment will persist. And that, of course, will continue to put downward pressure on the rate in the market. And the biggest boost for that is the monetary policy stance of the central bank to allow interest rates to be low, to allow liquidity to be sufficient to create loans and spur demand for that will create economic growth.
Speaking about liquidity, yesterday the DMO had a bond auction. How was the turnout like?
Yeah, it was quite impressive. As usual, like I said, the liquidity condition is very, very significant. If you look at liquidity conditions going forward for the remainder of the year, from October, November, December, they are on an average of about R1 trillion each maturity from minimum maturity. So we saw that demand, and that demand came into the bond market as well. So for bonds and treasury bills, we constitute significant demand for them with the downward pressure on the rates in those markets, in the bond and treasury bill market, for the general liquidity condition, which is expected to be buoyant for the remainder of the year.
With the lower rates we're seeing in the fixed income markets now, isn't that likely to push investors away from that market to the equities market?
Well, it's a possibility because the normal trader, when we see in the normal traditional view of this, when we see a decline in fixed income rates, there's usually a movement of migration towards equity. But however, of course, we can see that equity market has kind of picked up. But that picking up of the equity market is still limited by the fact of the risk affecting the general economy in terms of the systemic risk, which is beyond companies, in terms of output good going forward. And that's the monetary policy of the central bank, trying to boost that output good. So even companies listed on the floor of investing are still faced, with significant negative outlook in terms of the demand for their goods and services, given the COVID pandemic and the fall in income, high unemployment rate, even the higher cost of production. You can imagine the inflation rate jumped up to significant, more than 50 basis points, from 12.8 to 13%. Of course, followed by price increase, removal of subsidies that have led to higher price, increase in electricity tariffs, and other incidental costs. And so there's no real safe haven, basically. So we see that there will continue to be a balance based on the risk appetite of investors. So people that have high risk capital always approach the equity market. After that, to preserve capital, we stay with the risk-free environment on the government security, which is treasuries and bonds.
All right, Babajide, thank you for your input on the program. Enjoy the rest of your day. Babajide Sholanke is a fixed income dealer at FSDH Merchant Bank. We'll have to leave it on the market review and hope for a positive trading day. Over to you, BC.
Thank you, Eddie Young. And that's where we end today's program. Thank you for watching. I am BC Adebayo.